Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Welcome to the YouTube series and my Robinhood portfolio. For today's video, I want to do a quick update on the portfolio. As you can see here, not a great day of trading. Down 2.62%, 16,269 in the red, bringing the portfolio value just under $606,000, 605,597 as you saw there as well. Bringing the weekly total, unfortunately, into the red as well. 0.73% down, 4,461. You can see all of the options that I have currently in the portfolio. And since I sold off all of these contracts for premium, negative numbers here is what I'm looking for. Yes, for some of the call contracts, this will mean that the capital that I have in the stock is depreciating. But overall, it's very good for these contracts that I sell off. I can roll these forward and get premium for the next week. Boeing here, the 170 call. Negative 12 contracts, meaning again, I sold off 12 contracts at the bottom of the screen, up 69.02%, 1,230. So tomorrow I'll be looking to roll this contract. Going down the list here, CGC, a 350 put, just kind of playing around with some marijuana stocks in the cannabis sector. I had this in the portfolio prior, lost quite a bit of money, but just decided to put a few dollars into this. 10 contracts, negative 10 here. Total return, negative $10. Probably will just let this expire on Friday if it is above the strike price there. Tesla $300 put, this is a very large contract that we talked about in the last couple of videos. Negative 9 contracts. Total return on the bottom, negative 75.39. You can see market value, if I bought this back, is negative 20,232. So you can see about $13,000 or so of premium that's been rolled. So even though technically, if I bought these back for negative 20,000, I should lose that amount because of that prior premium. I'm only down 75.39. Let's go down to the other Tesla contract here as well. 260 call contract, negative 18 contracts. Again, on the bottom of the screen, you can see total return up 14,304, 24.99%. Market value, again, if I wanted to buy this back, is negative 42,930. So you can see the tremendous amount of premium that I've gotten in this particular contract, rolling these contracts forward. But I am hoping that the price of the stock does drop a little bit more so I can get out of this contract a little bit, kind of a double-edged sword. You don't want to drop it too much because I will be losing money overall with the amount of shares that I've invested in Tesla, but it also gives me the opportunity to roll out of this particular options contract as well. Let's go ahead and go down to the watch list. I do have some of these ETFs in the portfolio. Again, ETFs that will actually have a positive rate of return if the market drops. These are inverse ETFs. I've had a little bit of experience with these in the past, invested in these in market downturns, and they can do quite well. These aren't stocks that you want to hold for the longer term, but for the short term, these can be quite nice hedging, so to speak, in your portfolio. So here, Invesco QQQ, this is a normal ETF. So this is simply tracking a modified cap-weighted index of 100 NASDAQ-listed stocks. You can see here the market sector is technology primarily because this is, again, following NASDAQ stock market. Apple, Microsoft, Amazon, Tesla, Alphabet, the parent company of Google, Nvidia, Meta Platforms, the parent company of Facebook, PepsiCo, and Costco make up the majority of the stocks in this listing. But if we take a look at one that's an inverse ETF about the same type of index, again, in the middle you can see modified cap-weighted market index of 100 of the largest non-financial firms listed on the NASDAQ. So very much like the prior, but this one here you can see it's up 1.15%. So if the market drops by 1.12%, this one is actually in the green by 1.15%. And there's also other ones that have leveraged exposure as well. This one's a 3x. In the middle you can see a 3x leveraged exposure to a market cap weighted index of US small cap companies. So a little bit different index that it follows. You can see this one's up about 3 times the prior one, up 4.2%. So again, where a normal ETF is down 1.12% today because the market did downturn, this is up 1.15% with a 1x inverse, and this one's up 4.2% with a 3x leverage exposure inverse ETF. If we click on that inverse ETF in the top left-hand corner of the screen, this kind of goes through and explains exactly what's going on. So if the regular market falls by 1%, that is up 2%, and vice versa. If the market goes up these will actually fall. You also have 3x exposure, which again, if the market goes up 1, these go down 3. Market goes down 1, these will go up 3. So that's the power of using these inverse ETFs. Again, just to kind of point this out, if you go for the longer term perspective, because the market is up, you're going to lose quite a bit of money. These are not buy and hold stocks. This is down 95.02%. This is simply a stock to use in the short term, especially if you think the market is going to drop for whatever reason. Buy these, make a nice rate of return, and then get out of these vehicles. Again, you don't want to hold these in the portfolio long term like a traditional ETF where you simply dollar cost average and really don't even need to look at the price. These are only used when you think the market is going to drop and only held for the short term. So yeah, just wanted to quickly go through those. I'll probably be putting a little bit of capital into a few inverse ETFs over the next couple of weeks. You can see the buying power in the middle here, 97,786. So I'm going to take advantage of some of that with these inverse ETFs. Again, it's very high risk, high reward type of trading, but that's what I have this Robinhood portfolio for, testing out new trading strategies and seeing if some of these will work out in the near term, especially when I think the market is going to downturn here over the next couple of weeks to next couple of months of trading. So again, just wanted to quickly go through my portfolio and talk about inverse ETFs. I'll end the video here. Again, if you guys enjoy the content on the channel, if you guys enjoy the video series, feel free to like, share, and subscribe. Until the next video, we'll see you then.